Good morning, everyone. I'd like to welcome you to today's webinar, Sales Tax in Microsoft Dynamics GP, Why Rate Tables Are Risky. My name is Whitney Mahon, and I'm an account executive here at FMT Consultants. I'm joined by John Reagan, Avalaro's Strategic Alliance Manager. Before we get started, if at any time during the presentation you have any questions, please feel free to type them into the comment box. I will be monitoring it during the entire presentation. Now I'm going to hand it over to John.
Thank you, Whitney. Good morning, everyone. Let me turn on my webcam. This is me. How is everyone? Don't be frightened. I don't look this chubby in real life or frightening. That's the haircut that scares people. But anyway, that's me, and we are going to be talking about the hidden danger in your tax rate tables when you're trying to be compliant with taxes today. So it's not that scary. It'll be fun, actually, and let's dive into it here. We're going to be talking about the current state of tax compliance. We're going to talk about challenges that you would face in being compliant using your ERP. We're going to try to reduce your audit risk, talk about automation, and have some questions and our contact information at the end, of course. Here's the current state of what's going on with sales tax. We went through the Great Recession not too long ago. A lot of states lost revenue coming out of that because fewer people are employed, fewer people are spending that much money. So there's over half our states, in fact 31 states, that have budget deficits. That's totaling $55 billion. States are looking to get out of the red and into the black, and a key area that they're looking at is internet sales. There's actually $24 billion in uncollected internet sales out there that states are going for. And how they're doing it? Well, they're looking at businesses such as your business. You are a tax collecting agent for the state, whether you like it or not. That's where the state's going to look for money. You're the one they're looking at to be compliant according to their rules. Why are they looking at sales tax? Well, sales tax is the biggest chunk of revenue that's coming into a state government. In fact, it's 47%. It's almost half of a state's revenue. So they're looking at the largest piece of revenue and trying to increase that. It's the easiest target for them to get at. And they don't make it easy. Sales tax, nobody likes sales tax because sales tax is just plain hard. It's no fun. Why is that? Well, think about this. Think back to when you were little. You were on the playground and you were playing a game and there was a bully in the game. And as the game goes along, let's say you start winning. Well, what's the bully's natural reaction? The bully will make the game harder. The bully will try to change the rules so that the bully can get an advantage. That's what a bully does. Well, I'm trying to make an analogy here between the bully and government. Government is trying to change the rules, trying to make the game harder so that they can get the advantage and get what they want. So they give you some challenges when you're trying to be compliant to the government through your ERP. First of all, what are those challenges? First of all, you can't get away from the fact that sales tax is a statutory requirement. And sales tax, any tax, is one of those two things in life that, as the saying goes, you can always count on. We won't talk about the other thing, but we can always talk about tax. It's always going to be there. And you're the person that's required to be compliant. You have to do it manually right off the bat. It's labor intensive, there's a lot of human error involved, and it's expensive, and we'll get into that. It's a 100% non-revenue generating activity. Here's the bottom line. It is a high-risk, no-reward activity. High risk, no reward. That's not good for any business. The task that you have to complete in order to be compliant is to manage all the taxing jurisdictions. Remember how I said the bully likes to make the rules, likes to make things more difficult? Well, the bully has carved up this nation's map into 11,000 little pieces. Each piece has a different reason and a different tax rate that accompanies that reason for bringing in tax. There's thousands of tax laws that are constantly changing, like tax holidays. new levies for this or that, building a new stadium in a city, whatever the reason is, there's a jurisdiction that's been carved out to handle it. The problem is here is that accuracy is everything. You have to be accurate and keep track of all this stuff. It's not easy. Look at all this stuff to keep track of. There's over 150 million mailing addresses that you have to have correct. There's over 11,000 tax jurisdictions, 35,000 sales or use tax rates, 30 million service exemptions, and 750,000 buyer or seller exemptions. If you're selling into all 50 states, that's a lot to keep track of. Let's take a dive into this world of complexity that kind of blows my mind here. There's a common misconception that sales tax is based on zip codes. Here's an area of Colorado and different zip codes that are shown. But sales tax isn't really based on zip codes. As I said before, it's based on tax jurisdictions. So within these zip codes, you have all these different tax jurisdictions that have been carved out by the government. In just this one zip code, there's 9 different taxes representatives. So it's not zip code, it's tax jurisdiction, down to the rooftop level. In some areas here, there can be a different sales tax on one side of the street compared to the other side of the street. Problem is that in an ERP, any ERP, it doesn't go down to that level of detail. You might look at zip codes, and that isn't, as we're looking here, accurate. It's risky and inaccurate to go by zip code. Another thing to be aware of is this concept called nexus. Nexus is a connection between a state and your business. It's commonly comes into play if you have a physical presence in a state. If you have that, then whether it's your people or your goods, that would give you nexus or a liability to pay tax into that state. But that definition is changing. Remember I said that the bully is changing the rules? Well, it's not necessarily a physical presence anymore. You could have what's called click-through nexus or affiliate marketing that could give you a liability to pay tax in a state. These are rules that are constantly changing. There's laws that are in the works in regards to nexus, and the laws are just trying to bring more revenue into the state, of course, and to change this definition so that it's more beneficial to the state. Sourcing rules have to be attended to. By sourcing, I mean, is the origin or the destination the place where we're going to apply the tax to? Some states have, here on the left, have origin-based tax rules. Some states here in the middle, like California and Texas, are mixed as far as sometimes it's the origin, sometimes it's the destination that will come into play, and all the rest are destination-based states. See how confusing this gets? There's exceptions. Rates and rules vary between states. Different industries have varying rules. Here's some of the industries that typically have more change going on and more exceptions than others. Bottom line here is manual research creates audit risk. You're doing all this manually. You may be in only 1 or 2 states, or you may be in all 50. Either way, it does get complicated, and the more complicated it gets, if you're doing it manually, the higher the risk is for human error. In fact, over half of all accounting professionals think that it'd be easier to run a marathon than to keep track of all this complexity around tax compliance. Bottom line, if what I said before really comes into play, it can be seen in the screen. Trying to do it manually is a no-win proposition. It's high risk, no reward. It's expensive. If you try to manage this manually, it adds up to, on average, 11 hours per week. The average accountant's salary applied to that means that it's about $60,000 that the typical small to medium-sized business is paying to manually manage sales tax compliance. If you take a survey of CPAs, only half of them think that their company's getting it right. 50-50 on it. So let me get this straight. You're paying $60,000 for an accountant to manually manage this, but you're only 50-50 on whether that job is being done correctly. That's not a good proposition for a successful business company to run, bottom line. And if an accountant comes into your place of business, on average, that auditor, if the auditor comes in, on average, the auditor will be there for 3 months, and to host that auditor, it costs close to $100,000 during that time period. So it's risky, we're not sure it's getting right, and it's expensive. So let's talk about how we reduce that risk. If you're looking at continuing to do this in-house, you really should do a nexus study to make sure that you're compliant and you're paying in all the states that you should be. You want to stay up to date, of course, with the rates, the rules, the jurisdictional boundary changes. You want to report your use tax as well, because auditors are looking at that as well as sales tax. You want to be compliant from day one, especially if you're doing new business in new states. Maybe you're expanding your internet presence. And maybe you want to look at automation with technology. We'll get to that in a second. You want to make sure that you have an understanding of your filing requirements. You want to get your calculations down to the rooftop level, not just zip code level. You want to make sure you know whether your products are taxable or not, or if that's changing. You want to keep detailed records, of course. And if you're business to business, you want to make sure that you have a process for managing exemption certificates, which are typically managed on paper, put in a banker's box in a closet somewhere, and there's a lot of human error surrounding exemption certificates. You want to avoid these common mistakes, failure to file a return, of course, or not reporting sales. All these are common sense, common mistakes that you want to avoid. There's technology out there now that can automate this. And I look back at in the 70s when ADP went into the market, small to medium-sized business, and said, hey, we can outsource payroll. Since then, now if you were to look at any small to medium-sized business, you'd be hard-pressed to find one that doesn't outsource payroll. Well, you can do that now with sales tax. The growth is phenomenal. We're growing at 100% per year. We're growing from what we have now at 18,000 customers. So by 2020, we expect to have 800,000 customers. It's just like payroll was in the 70s. By 2020, you're going to be hard-pressed to find a company that doesn't outsource sales tax. Why? Because it saves time, it increases accuracy, mitigates risk, improves your efficiency, and increases your profitability. The company is called Avalara. In a nutshell, what we do is we provide tax rate calculations in less than a second. We manage your certificates, exemption certificates, that is, if you're business to business, and we can automatically file your returns for you as well. How does this work? It's pretty cool. Here's Avalara. We're totally cloud-based. We were born in the cloud. Up there in the cloud, we're keeping track of all those tax rates, the tax jurisdiction boundaries, the taxability rules, and also all the addresses across the country. All that's up in the cloud. We're responsible for it. You aren't. Here's your ERP. And the ERP has a transaction. A transaction would be maybe a sales order or an invoice. The transaction is looking for the sales tax relating to that transaction. It will go up to the cloud through a connector that we've already built and knock on the door to the cloud and say, hey, I've got this origin location, I've got this destination location, I have these taxability rules that we'll look up, and then we'll look up the tax rate, and then in less than a second, send that tax rate down to the ERP. Over time, we collect all this data about all your transactions. So why not make good use of it? Why don't we send that information down in a report to the CFO, let's say, at your company, and that is a report that includes all the transactions, let's say for the quarter. You may report quarterly, so you could hit the go button and then we would mate the transaction data up with the applicable forms and electronically do the filing for you. So you don't have to do any filling out of reports or filing. We would do that electronically for you. And we could set up an ACH account so that we automatically send the payment as well. And over time, we're monitoring government for any changes in those tax rates, boundaries, and rules. So that's how it all works in a circle. Regarding exemption certificates, they're also up there in the cloud. We wrap workflow around it so that they're always digital, they're always fresh, so they don't expire, and so that if an auditor comes in and sees that you're tax exempt and asks for those tax exemption certificates, you can get them very quickly and show that it is a valid statement that you are tax exempt. We're growing like crazy. We're adding integration all the time. We're improving our technology and adding services all the time. This is a very fast-growing market. We're expanding like you would not believe, and it's a lot of fun. This solution works. I rarely ever have a problem, hardly ever, in terms of implementation or the service itself. Here's some of our connectors, our integrations here. We have close to 500 at this point. Like I said, we have 18,000 customers. Here's a quote from just one of them. They had 90 different tax jurisdictions that they had to manage, and it would have been a nightmare to do that manually, but it all got handled beautifully, as the controller says. So we could handle this for you. And as I said, you're going to be looking at this sooner or later because just about every company is. As I said, we're growing from 18,000 customers now. In just 5 short years, that's going to be 800,000 customers. This will be the norm in the future, so it works. It's something that you do want to look at, and the sooner you look at it, the more efficient your company would run. The solution doesn't sleep, never vacations. It's extremely accurate. We're applying expertise that you don't have to do research on or apply yourself. We grow as your business grows, and this can be had for as low as $82 per month. It's not a solution that comes in a server that you have to install locally. It's all up in the cloud and is constantly maintained, constantly up to date. And for accounting reasons, you can apply the cost as an expense, which is a very good thing. So this is our contact information. Feel free to reach out to Whitney or myself, and we can answer any questions, any concerns, and see if we can help you to get rid of this burden. And Whitney, did you want to talk about nVerge? And if there are any questions, let me know.
Yeah, definitely. Yes, I did. So just a friendly reminder that FMT will be hosting our annual nVerge conference on October 27th at the Town & Country Resort in San Diego. Just to name a few things that this event will include, we will have 35 plus keynotes, breakout and roundtable sessions, breakfast, lunch, and cocktail reception is included as well. We will also have an expo floor, which Avalara will have a booth at. So if you want to meet some of the Avalara team, this is an event that you can't miss. To learn more and register, go ahead and visit www.nverge2015.com.
Thank you, Whitney. Are there any questions on any of this?
I don't see any questions right now, but we can keep it open for a few minutes for those who want to ask any late or last minute questions.